What if I told you that your paycheck, your mortgage, your student loans, and even your grocery bill are not just about economics, but about politics? In this video, we're diving into the often hidden relationship between politics and finance, the deals, the laws, and the power games that shape your financial life, whether you realize it or not. This is the politics of finance. 1. Finance is never neutral. Finance is often portrayed as objective, numbers, charts, balance sheets. But underneath all of it is a web of political decisions. From how interest rates are set to who gets access to capital, these outcomes are shaped by people in power making choices that reflect political agendas. The rules of the game aren't set by nature. They're set by institutions, often influenced by lobbying, ideology, and self-interest. 2. Wall Street and Washington. One of the clearest places we see politics and finance collide is in the relationship between Wall Street and Washington. Financial firms donate billions to political campaigns. In return, they often get favorable legislation, tax loopholes, and deregulation. Think about the 2008 financial crisis. The banks were bailed out with public money, but millions of Americans lost their homes. That wasn't just a financial event, it was political. 3. The Federal Reserve. Powerful but unelected. The Federal Reserve, America's central bank, plays a massive role in shaping our economy. It sets interest rates, prints money, and controls inflation. But here's the twist. It's not elected by the people. While it's technically independent, its decisions often have political consequences. When it raises rates, borrowing gets harder. When it lowers them, inflation can spike. And each of these decisions benefits some groups more than others. 4th, who writes the financial rules? The tax code, banking laws, and corporate regulations are all written by lawmakers, often under pressure from lobbyists. That's politics at work. Why do billionaires pay a lower tax rate than middle-class workers? Why do private equity firms enjoy carried interest tax treatment? These aren't accidents, they're the result of decades of political maneuvering, campaign donations, and influence. 5th, global politics, global finance. Finance doesn't stop at national borders. International trade agreements, currency wars, and sanctions are all examples of political tools that affect financial systems globally. When the U.S. places sanctions on a country like Iran or Russia, it freezes access to international finance. That's not just diplomacy, it's financial warfare. And the ripple effects hit everywhere, including markets, gas prices, and even your 401k. 6. The dollar and American power. The U.S. dollar is the world's reserve currency. That gives America enormous leverage over the global financial system. Most countries must hold dollars to trade internationally, especially in oil. That's why U.S. sanctions work so effectively. But this dominance is also political. It reinforces American hegemony. And as nations like China push back, we're seeing a financial arms race unfold with political implications. 7. Banking the unbanked, a political choice. Millions of Americans are unbanked or underbanked, not by choice, but because of how the system is structured. High fees, lack of access, and systemic discrimination prevent many people from participating in mainstream finance. Could the government step in with postal banking or public financial institutions? Yes, but whether that happens depends on political will, not just economic feasibility. 8. Student loans and political control. Student loan debt isn't just a financial burden, it's a political weapon. Decisions around interest rates, forgiveness programs, and access to education are made at the political level. Every promise to cancel student debt is a political strategy aimed at mobilizing specific voters. The trillion-dollar student debt crisis exists because of policy choices, not market forces. 9. The politics of inflation. When inflation hits, it hurts low-income households the most. But how inflation is managed, or even understood, is shaped by political interests. Corporations may raise prices and blame inflation while enjoying record profits. Politicians may blame the Fed or other countries. Inflation, while economic in appearance, is also a narrative tool in the political game. 10-point financial literacy as a political act. Financial literacy is often promoted as a personal responsibility issue. You should know better. But let's be real, schools rarely teach it. And when they do, it's shallow. That's not accidental. A financially literate population is harder to manipulate, harder to exploit, and more likely to demand change. Teaching people how money, debt, and investing work is a political act. 11. Who benefits from complexity? Ever wonder why the financial system feels so complex? Why your taxes are hard to file? Why investment disclosures are filled with jargon? It's not just bad design, it's intentional. Complexity creates a power imbalance. It allows institutions and elites to operate with little scrutiny while keeping the average person overwhelmed. When only a few understand the rules, they get to bend them. 12th, campaign financing and financial policy. Money in politics is a direct link between financial interests and public policy. When corporations and the ultra-wealthy pour millions into campaign donations, they're not doing it out of charity. They're investing in favorable regulations, tax cuts, and policies that protect their capital. Campaign finance laws are supposed to limit this influence, but loopholes like super PACs and dark money make it easy to buy political outcomes that shape our economy. 13. Bailouts versus safety nets. In times of crisis, governments act fast to rescue big banks and corporations, but often drag their feet when helping everyday people. During the COVID-19 pandemic, trillions went to stabilize financial markets, while stimulus checks and unemployment aid took months to reach struggling families. This isn't just economics, it's a reflection of political priorities. Who gets saved and who gets left behind is a political decision every time. 14. The wealth gap is a policy outcome. The growing wealth gap in America isn't a natural accident, it's the result of decades of policy choices. Tax codes that favor capital over labor, cuts to social programs, deregulation of industries, privatization of essential services. All of these tilt the playing field toward the wealthy. Politics created this inequality, and politics can reverse it, but only if there's public pressure and collective awareness. 15. Lobbying and deregulation. Corporate lobbying has reshaped America's financial landscape. Industries like banking, insurance, and fintech spend billions lobbying for deregulation. Every time a rule gets weakened, risk is pushed onto the public. Look at the repeal of Glass-Steagall, which once separated commercial and investment banking. It opened the door to the 2008 crisis. Deregulation isn't about freedom, it's about profit and power. 16. Crypto and political power. The rise of cryptocurrency challenges traditional financial systems, but it's also becoming deeply political. Some see crypto as a tool for financial freedom, others see it as a threat to national monetary control. As the government debates how to regulate it, powerful interests are lining up on both sides. Crypto isn't just a tech story, it's a new frontier in the politics of finance. 17. Real estate and zoning. Real estate might seem like a local or personal financial decision, but it's deeply political. Zoning laws, tax incentives for developers, rent control debates, and public housing policies all shape who gets to live where and at what cost. NIMBYism, not in my backyard, is a political movement, and housing affordability is a political crisis. Behind every real estate trend is a series of political decisions. 18. Central bank digital currencies, CBDCs, governments around the world, including the US, are exploring digital currencies controlled by central banks. While they promise efficiency and inclusion, critics worry about surveillance and loss of financial privacy. A CBDC could reshape how we spend, save, and invest, and who controls that data. Again, these are political decisions with far-reaching financial consequences. 19. Media, narratives, and financial opinion. The way financial news is framed on TV and newspapers or online shapes public perception and political opinion. Media outlets often echo the perspectives of their advertisers or owners, which can skew narratives. One outlet may blame inflation on wage growth, another on corporate greed. These narratives influence elections, policies, and investment behavior. Media is not just reporting on finance, it's participating in the politics of finance. 20. Your financial voice matters. So what can you do? First, recognize that your financial life is political, whether you're voting, budgeting, investing, or just trying to make ends meet. Second, stay informed. Push for transparency and financial education. Support policies that close wealth gaps and hold powerful institutions accountable. The more financially aware and politically engaged you are, the harder it is for the system to ignore you. Because at the end of the day, finance isn't just about money, it's about power. And that power belongs to all of us. And subscribe to New York City Finance. If you have any question, ask on the comment section. We will be available to answer you.